Hi traders, and welcome to my video on the bear trap trading strategy. I'm going to show you how you can use this reversal strategy to capture moves such as this one for almost 200 pips. So how does the bear trap strategy work? Well, the first thing we're going to look for is a downtrend. As you can see, we have a clear downtrend here on the chart. This is a euro dollar 1 hour chart. So you look for the downtrend. And it's called a bear trap because basically the bears, or the people who are selling, are going to get trapped. Not necessarily the ones who have sold here or here and here, the ones who have sold early, but the ones who are going to get in too late, the ones who are arriving late to the party, want to see this trend and want to get in on the action. They're going to have the door closed in their face, hence the name, the bear trap strategy. So price keeps on falling. Hopefully you would have had a nice entry into this trend here. Just for argument's sake, let's say you saw that M pattern form and you entered on the breakout. Here I do have videos on various candlestick patterns, price action analysis and technical indicators, breakouts, reversals, just lots of videos on different trading strategies you can use to get into trends such as this one. There's also a nice wedge pattern form there, so we could have traded on the breakout there. Breakout there as well. Okay, market making lower highs, some bearish candlestick patterns. So this trend continues down nicely. Okay, we have this support level here. See that big breakout candle there. Okay, so there was ample opportunity to enter in on this downtrend. Just using price action, support and resistance, and candlestick patterns. Okay. Have a 3 inside down candlestick pattern there. That's a bullish candle followed by a bearish candle that's at least 50% the body of the bullish, and then a third candle that breaks below the low of the first candle. So that would have been a good confirmation there. Okay, so you can see there was ample opportunity to enter in on this downtrend. Now what happens is the people who arrived here, okay, they open their chart, we're here and they see all of this and they think, well, this is a good idea. Let me try and enter a sell trade. Well, first of all, you're going to be selling low. You never really want to sell low. You want to sell as high as possible. So if you sell low, you risk the market reversing and being caught out. Okay. So our trader is here and they've marked their support level. This one here, 1, 2, 3, a triple bottom level of support, and they're going to enter on the breakout here. Okay, fair enough. You know, there was 20 odd pips in this move, but I'm assuming we are trading the 1 hour chart, so if I haven't moved the stop loss to break even, the price is going to start turning around, and that's what it does. Market starts making higher lows. Okay, and then this is the bear trap, because the people who sold on this breakout or just selling anywhere here for whatever reason, they might be selling. They're selling at the low, so they're going to be the bears who are going to get caught in the trap. And then what happens with a bear trap? Price reverses significantly to the bullish side, as you can see from this bullish move here. Lots of bears were trapped. This triggered stop losses, which probably a lot of people had placed around this area. Okay, the support come resistance. The stop losses have triggered. They're going to look to get in on the buy side. There'll be other traders who have milked this trend from up here. They've exited positions, and all of this is going to cause this big move you see upwards here. So this would have been a good time to trade the the bear trap trading strategy. Okay, very simple. Just need to find the downtrend on your chart. Wait for the bears who are getting late to the party and trap them, and then take advantage of the momentum caused by their stop losses and other traders entering on the buy side to get into the reversal of the trend. This move, had you entered on the breakout of this trend line here, almost 200 pips. Could have placed your stop loss just below the low. there, moved it to break even, maybe move the stop loss, trailed it to here, lock in all this profit. As price came up here, we could have placed our stop loss up here somewhere and perhaps look to exit once we see this consolidation and reversal to the downside. Yeah, so that's it. That's the basic way to trade the bear trap trading strategy. You wouldn't necessarily have had to have entered on this, the breakout of the trend line. You could have also seen this W pattern formation here and then a breakout. So the W chart formation is like this. It basically looks like a W. I'll just draw that for you. Okay, so we have our W there and our breakout. Stop loss could have been around this low here somewhere. So yeah, a good powerful strategy. You can use this on any trading instrument, Forex, cryptos, commodities, stocks, indices, etc. Any chart time frame. I find the longer term chart time frames tend to be more reliable because they contain more price data. This is a 1 hour chart, as I said. I'd look at the 1 hour, 4 hour, daily, weekly, and even monthly for swing trading. You can use it on the 5 minute and the 15 minute. It's just you're not going to catch moves as big as this one, I don't think. And, you know, you're going to have to be watching the charts longer. With a 1 hour chart, you can just pop back and check every hour, if that, and look for these moves. With so many different trading instruments to choose from, you don't need to force it. You know, you can look for a time frame and an instrument where such pattern has appeared. Okay, just one more example of a bear trap. Here you can see we have the downtrend. So we draw our resistance line there. See, good opportunities to enter in on this trend. Breakout there. M pattern formation with a breakout. Nice bearish candlestick patterns. We have the pullback here. Again, another M pattern and a breakout. Potential entry. Potentially here, this breach of support level as an entry. There's ample opportunity to enter this downtrend now. What's going to happen is some traders are going to get excited and want to jump in here. They're going to be late. These are the bears that are going to get trapped. Maybe even here. As they see price start falling again, they want to jump in. However, what happens is these bears are trapped in this wedge pattern we have. Price reverses, it bounces off this support level. It's actually a double bottom candlestick pattern there, candlestick formation, and we can just draw our resistance. This area here, and it's the breakout of this trend line for this bear trap, and you can see from the big up bar there, the bears who are trapped are counting their losses, and this is causing momentum to the upside. Traders who are excited to get in on the potential new trend have jumped in following this bear trap, and it's as simple as that. No technical indicators needed, and a move of around 80 pips, give or take. Okay, well, hopefully that's clarified what the bear trap trading strategy is, and you can start looking for them on your charts. I hope you found something useful in this video. Please like and subscribe for more, and I'll catch you on the next one.